Woo! Traders, what's going on? It's Jerremy Alexander Newsome with Real Life Trading, and it is indeed Wednesday, January 20th, or should I spell it W-I-N, Wednesday. Shout out to Zane for that one. That was a good one. Ladies and gentlemen, some of you are probably thinking, does this guy ever not excited? No, I'm not. Especially if the market is doing what it's been doing the last few weeks. Truly, I didn't even know what day it was. I'm glad that someone reminded me. That's how the last 3 weeks have been. It's like sleep. Sleep. This guy in his sleep. It has been amazing. Incredible. Probably and truly at this point, the most profitable month and weeks and days. Just been destroying it, and I'm loving it. I know I'm pumped, and what I will say this as a side note, I do feel bad because there are truly a lot of people, a lot of traders out there who are getting hit pretty hard in their longer term accounts and their 401ks and IRAs. So I hope for them that the market bounces really strong and we just go in an insane bullish rally. I really do hope that's the case. I don't think it's not looking like that right now. But for active traders or those who watch these YouTube videos, who I'm assuming you really love the markets, you love trading, this is going to be an amazing year to be a real life trader, and I am super excited about it. Let me just share some of the stats really quick with you guys for this month thus far. So the day trades, we have had some incredible trades. We have had 1, 2, 3, 4, 5, 6 trades over 2R. One of them was a 4R trade yesterday. We had a trade on Visa that was over 3Rs just a few hours ago. Had one 6.4R trade on Gap just the other day. So far we're at 18R for the month with less than a 50-50 win-loss ratio. That's outstanding. So let me just do some math for you really quick. Let's say you were trading a $100 R, which is a pretty common risk. That's an R per day trade. So if you're trading a $100 R, 100 times 18 is $1,800. Not too shabby. But it's not about the money necessarily. I mean, obviously with $1,800, you're paying for the trading room already and in full for a few months, years almost. $100 R is good. My objective in trading and teaching people about day trading is taking that and slowly increasing it. Next month, we'll probably be increasing our R on the trading journal to either 150 or 200. Probably 200, and just showing traders how it does take some time. But this time last year, we were trading with a $50 R. We've increased that now to 100. We'll be increasing that soon to 200, and then just slowly but surely adding more and more weight. And just imagine if you're trading the exact same way, same style, being consistent, and you're trading a $1,000 R. That's $18,000 so far in the month of January, and it's not even over yet. It's just getting started. So I'm pretty pumped about it, ladies and gentlemen. Now that's our day trade. So those are our day traders. Our swing trades. We have hit so many swing trades today. A lot of them hit their targets today. So we're almost 11R on the month for our swing trades, which is really, really great. So I'll go through some of those. A lot of you guys know we've been looking at CMI pretty often. CMI almost called the bottom to the penny on CMI today. The low was 79.88. Our target was 80.14. Exited that like a gem. Ticker symbol Mosaic, MOS. You guys have been seeing me track this one as well. Traded to the target. Had a target just right above that trend line. Low of the day was $22.69. We exited at $22.79. What else did we trade out today? General Dynamics, ticker symbol GD. We exited GD today for a really solid trade. Really beautiful gap on General Dynamics. Great looking trend. Trade to our target today, so we exited out of that trade. And we are still in right now 4 trades. So I'll look at those with you. Here's Fossil. So we haven't traded our target on Fossil. Might get trailed out, which is totally fine. It would be for a very healthy profit. The stop right now is at 31.01 on ticker symbol FOSL. If we get trailed out there, no worries. It'll be a profit. It's totally fine. That's okay. JetBlue might end up kind of breaking even on JetBlue. We'll look at it a little bit more tomorrow, which is on Transportation Thursday. But JetBlue, our entry was back here somewhere. Our stop is right there, and earnings is coming up next week. So we'll give it a little bit of time, but end up probably getting stopped out. Speaking of getting stopped out, did get stopped out on an Amazon swing trade that I set up. It was here, and stop was right there. And really, the reason I set this trade up is because it just did exactly what I wanted to do. We set up a trade yesterday in Tech Giant Tuesday. It did it, traded, and got stopped out. So lost on that, but no big deal. This was my analysis from yesterday, by the way. Boop, right there. So Amazon got stopped out. So the trades that we still have open, QRVO, Bank of America. Bank of America did trigger today. Here's our Bank of America trade. I will say that I don't think this one's over, folks. Earnings just came out. A lot of volume picking up on Bank of America. We broke a very, very strong support. Here's your weekly chart. And your weekly chart, check it out, folks. Broke an incredibly strong support at $14.41. A lot of black candles in a row. So I am anticipating a pullback, which I would refer to as a retest on Bank of America, and then likely a continuation a little bit lower. So keep your eyes on Bank of America. At this particular point in time, I am bearish on it. QRVO, we're in bearish. And the only trade that has not triggered in yet is QEP. So I don't have that many trades sitting out there open. Here's the daily chart, and I might end up canceling this one if it doesn't trigger tomorrow or the next day. It's a limit sell. So I'm wanting to get in on this on the pullback, aka the retest. Hopefully it rolls over and trades to our target before earnings. So this is a limit sell at 93, stop at 1085, target at 783. That's on QEP. Not sure if that's going to trigger or not, but that's the only swing trades we have. So we don't have that many swing trades. The ones we set up in January, we've only set up 9. We've set up 9 trades in January, and so far, those trades in January, we're up 8R in January, carrying over from December, 10R. So it's a great month. It's a fantastic time to learn to trade or to trade in general. Now, let's talk about big picture stuff, shall we? So want to give a shout out really quick to some of the traders on the Real Life Trading Facebook page. Let me kind of bring this over really quick here. And we posted yesterday. We got over 5R alone yesterday. Did another 5R again today in the morning room. So again, just really just crushing it with some of these day trades. But shout outs to Bob. Bob said he got 2R and counting on Starbucks. So let's go look at Starbucks really quick. Turkey symbol SBUX. And you can see on Starbucks, had a nice little retest gap, so black candle gapped down. Earnings is approaching on Starbucks, so I think that is coming up very soon. So since we're here, let's just simply talk about what Starbucks might do on earnings. Here's a little bit of a resistance line, and the trading view fairies change the colors again. There we go. All right. And I'm going to get some long-term moving averages here on Starbucks, and perfect. Okay, we're right at the 200. So what I would like to see, and I'll write this in, I would love an inside candle tomorrow that's white. Then a gap down below today's low. That's very bearish. That's what I want. Or I'd also like an open above, or an open above 60.15. And those would be clearing pivots. So here's pivot 1, here's pivot 2. And if we clear those on earnings, it's likely going to move in that direction. I'd prefer a bearish gap because here's your little lower trend line. So we could run into that gap, kind of bullish. But a lot of bearish volume today on Starbucks. A lot. Things are really starting to heat up out there. So I'm going to hop over here to SPY, ladies and gentlemen. We are hanging on by the skin of our teeth. This was a trade, and this was really when I was exiting all of our trades today when SPY was at the support, 182.43, because we thought it would bounce. Now, some of you are probably saying, yeah, Jeremy, that's hindsight. Nope. 3 hours ago in the trading room to call this SPY tweezer bottom on the hourly, and here's the exact analysis. So 183.68 mentioned we're going to be slightly bullish if we break above that point. Talked about this location being the neckline, and I would like a retest into 187 on the short-term level. Well, interestingly enough, the high of the day was 187.50. Booyah! That is some analysis. I love it. I'm feeling it, man. I'm on fire. And I will also say this. Anytime I feel that way, when I just feel on top of the world, I feel like I can't lose on a trade, I usually take a break because the market will 100% humble you. So you got to stay cool, calm, and collected. You got to stay humble. If you make a lot of money, awesome. Lock it away, lock in the profits, protect them, cash it in, make that money, make that profit real to you. And then be cool, calm, and patient, and remember the small success steps that you took to get you to where you are, and then repeat them. Don't get big-headed, and I'm really talking to myself right here. Don't get big-headed. Don't get an ego. Just trade like you always have traded. Follow your plan, and be a real-life trader, right? That's what trading is all about. So I'm excited that this little market is filled. When I talked about hanging on by the skin of our teeth, guys, this is, guys and girls, we're here. This is it. Will we bounce from this location? Possibly. Possibly. It's going to take, not a miracle, but it's going to take something. It's about the equivalent of the Seattle Seahawks beating the Carolina Panthers last weekend. Right now, it's 31-0 in the half, and this is the SPY. Are we going to bounce from here? Maybe, but we got a really nice high wave candle today with some serious volume. Things are picking up, ladies and gentlemen, and we are at, true story, and this is going to sound kind of doom and gloom, but we're at the do or die point right now. If we bounce, awesome. I'm fine with that. I'm not expecting a huge rally, but I am neutral long-term still on the S&P. There are a few indexes that I'm not bullish on. I'll look at those in just one second. So buy the bounce, long-term, we're here. It could bounce. This is not the place to go bearish. This is a place to lock in some bearish profits and then see what happens from here. I do want a little bit of a bounce. I'm not exactly sure how high it'll go. This is a very strong level between this point. We could do this. We could also do this. But, folks, if we start breaking 180, 181 with some strong gaps and some strong volume like we're seeing, I think we're going to retest the 2007, 2008 highs on most of the markets. And for the SPY, that's about 153.37. Really, really big sell-off if that happens. It's going to happen very quick. And I can assure you, if 2016 is the year that the market takes a little bit of a tumble, you're going to see a lot more market shutdowns because it's going to be very, very fast and very furious. Here are some ETFs that have, in my opinion, confirmed bearish. IWM is confirmed bearish. You got a lot of black candles in a row. This was a retest gap, and I've mentioned a few times I'm not going to take the breakout. I am going to take the retest. A lot of people probably went bearish today. They're about to get hosed or are getting hosed on the retest. That's when I'm going to be looking to get in short on this retest and look for some rollover signals. One of my really good buddies, Adam, asked me to look at XLE. This is another ETF, market ETF, that I am also confirmed bearish on. And here's this long-term trend line on the XLE back from 2003. This is a weekly chart. You can see the higher lows. Really, there's a lot of gobbledygook down here around 40. We've broken it. A lot of volume is coming in. We have broken this trend line. Whatever retest we get, I'm looking to short the retest, but at this point, confirmed bearish, and likely next target, maybe 2016, maybe early 2017, is $34. I do think energies go lower. I still think oil has a little bit lower to go. That's just my thoughts. Could be wrong, but I'm going to be very, very patient. ICLN. This is the Global Clean Energy ETF. Volume's a little bit weak on this one. Not super tons of shares traded, but you're getting down to a low that it was at in 2013, which is $6.10. For long term, you could consider picking up a little bit there, but if it breaks $6.10, get ready for it to really probably continue much lower into $2, maybe $1, and at that point possibly get a reverse split on ICLN, and I think there's a really, really good chance that a lot of that happens in the market on some of these stocks. Now, your XLV, this is the healthcare sector ETF, and this is one that's showing some reversal signals but hasn't broken yet. You have some really interesting trend lines on here, very, very steep angles. And some of you are probably thinking, Jeremy, this looks like a lower high right there. It does. It does look like a lower high on a weekly chart, kind of reminiscent of a little bit of a double top pattern. And here is your daily chart on the XLV. Got a really nice white candle today out of support. So what I would like the market to do, true story, is probably trade and grind a little bit for 2 weeks or so. Would be fantastic if we can get that. Probably really going to slow down and calm down the amount of trades that we're getting into because we are at a very, very strong target. We are at a very, very strong neckline. This is do or die market time right now. Will we bounce? I truly do not know. But if we don't, ladies and gentlemen, it's going to be one of the most cataclysmically interesting bearish markets you've seen in a long, long time. More market participants, faster internets, faster computers, faster order routes, faster order entries, faster order processing, more high-frequency trading out there, more people informed on the markets. Oh, man. It's going to get wild. A lot of volatility. I hope you're ready for it. And if you're not, hop over to reallifetrading.com. I'll be happy to teach you whatever you want to know for free. And if you don't consider yourself a day trader and you're a longer-term trader, just at least learn how to protect yourself. You can always go to our YouTube channel, which you're watching this video on right now, more than likely. And you can subscribe to our YouTube channel if you haven't already. I would love if you could do that. And you can also, one of the most interesting videos, I think, is adjusting the trade protective puts. So you can always watch this one as well, because that's the video that I talked about 11 months ago, mentioning this very type of market was upcoming. And I'm not going to say I was one of the first, but I was one of the first, and mentioned in that video that the use of protective puts here is going to be very, very spectacular, because if we do have a rollover, you're going to want to have some protective puts at these levels. So regardless, ladies and gentlemen, I appreciate you watching this video. I know it's a little bit long, but there's just so much to update on. There's so much to talk about. I'm so excited. I got so many text messages, emails. Oh my gosh, it's been an amazing month. It's been an amazing month. Thank you for watching. Thank you for your support. Join the trading room if you haven't been in there already. Traders are making so much money. They're burning it to stay warm at night. I'll see you guys later. And until next time, remember, love life, live life, and trade it. See you.